Greetings, members one and all of the Salivation Nation. Gold has stalled. Now what? Let's explore. Yes, that's right. We're looking at the charts right now. The prices of gold have pulled back a little bit, barely edging above $1,700, but still, that's a pretty good number for gold. It's doing very well, but it has kind of lingered there for several different reasons, and we'll explore some of that reasoning here in a moment. But silver is also down, but still above $15. Platinum is up a little bit. Palladium and rhodium both down, and it is quite an interesting time. There's a lot going on, and is in many ways unpredictable in some form, because many people thought, well, hey, we saw that dip in gold prices, and now we're starting to see the bull market, but so many of the gold timers have turned bullish. And so according to this opinion piece from Market Watch, Mark Holbert says not to look for the metal to shine. So he says after a prolonged rally, gold's near-term direction is most likely down. So the gold timing community has become exceedingly bullish, and contrarian investors know that excessive bullishness is a bad short-term omen. You know, there is a psychological aspect to this that I believe all of us fall victim to, including myself, because I am bullish on both gold and silver, especially gold. And even with this little pullback today, I still am bullish for gold in the medium term and long term. But I doubt it's going to go down by a whole lot, even in the short term. But there is something to be said, you know, whenever we see multiple days of increased prices, that it tends to provide momentum for a steeper climb. And this pullback, even though it's slight, you know, does not necessarily mean that it's going to go down much more. I don't believe it will, because $1,700 is still a very high price for gold, I believe, right now. The article continues to consider the average recommended gold 0.13% exposure level among several dozen short-term gold timers that the author monitors on a daily basis as measured by the Holbert Gold Newsletter Sentiment Index. The average recently jumped to 70%, which is higher than 97% of all readings since 2000. That is quite something. Recently, he devoted a column to this sentiment index. In fact, I think we covered that story, which came after several weeks in which gold had particularly disappointed investors. Far from hedging the S&P 500's SPX of 0.52% bear market, gold fell along with it. Many erstwhile gold bulls threw in the towel in response, and as a result, the HGNSI had fallen to minus 2.4%, which means that the average gold timer was allocating 2.4% of his gold trading portfolio to going short. In that column, he wrote about contrarians were starting to smell opportunity. 2 days subsequently, the HGNSI dropped even further to minus 22%, which is shown in the chart below, was one of the lowest readings in several years. Gold price is almost $250 higher now. So yeah, we can see here there's there's that negative 22, and now look where we're at now. The latest reading is a 70%. We can see how this goes up and down, and we can see how the gold price moving along here with it. You know, it got high 1750s at one point, and now it's still hovering above $1,700 right now. It'll be very interesting to see how it plays out and how that index will move. Unfortunately for gold traders, contrarians have become as bearish about gold's near-term direction as they were bullish then. To appreciate what the historical record teaches us about gold's prospect in the wake of high HGNSI readings, consider the performance of two different gold-related ETFs. the VanEck Vectors Gold Miners ETF, and the VanEck Vectors Junior Gold Miners ETF. The top two rows of the table report returns following 5% of days since 2000 in which the HGNSI was lowest, while the bottom two rows report returns following the 5% of days with the highest readings. So there you go. Look at that. Interesting indeed. Notice the large difference in average returns subsequent to the gold timers being exceedingly bullish or bearish. The returns reported in the bottom two rows amount to sobering odds that the gold faces right now. Now, keep in mind that he's talking about ETFs, and I know we just talked about the price. The only price that matters is the prices that we buy and the prices that we sell. But this gives us some sentiment. There's a lot of psychology, and it doesn't take away the importance, as I mentioned in that video, of spot price and how it weighs on those other prices, even if the premiums have widened as of late because of supply issues and the like. How much would the HGNSI have to fall in order to shift the odds to the more bullish ones at the top of the table? It would have to drop from its current 70% to at least minus 20%, a decrease in average gold exposure of 90 percentage points. While anything is possible, such a huge shift in sentiment is unlikely to occur in just a few days' time. Gold's decline on Monday of this week is only the beginning. The usual qualifications apply, however. Sentiment is not the only factor which impacts gold market's near-term direction. And it might very well be that the gold later this year will reach a new high. I still think it will. But if the next several weeks adhere to the historical pattern, the path gold takes to get there will take it lower first. And that is interesting sentiment, and I can see how these patterns will play with the wide movements in the HGNSI reading. There's even less gesticulation in the gold price pattern, but they do somewhat follow, which is kind of interesting to see how it plays out. There's a lot of psychology in the markets, and that does, obviously, it manifests itself first, I think, in the ETF world, because that's where the movements and how a lot of the spot price is derived. Very, very interesting indeed. So that is kind of where things are at with how the psychology, and we've talked about psychology a lot in the markets, and sentiment. If we have a couple of days of flat and slightly lower numbers, well, it could be we may have plateaued or bottomed out before another rise up again. But it is interesting to see. I mean, this is still a very high gold price in my view. $1,710 is quite high, and I believe silver still has a lot of room to move upwards, but it is falling even faster than gold at this point. And so yes, it will be fascinating to see where it plays out. But what are your thoughts with this gold stalling here for kind of a second day? Are you in a buying mood? Is this territory that you can make a purchase, or maybe not? Maybe it's still too high for many of us. Or what are your thoughts? Do you think it's going to go even lower, or do you think it's going to go higher? It'd be very interesting to see how it plays out for sure. But nonetheless, one thing's for certain is that the way that our money or our currency is being printed, like it's going out of style, and with more and more of these relief packages going out, it seems like, what are we on, round number 4 now? It is going to be very, very interesting to see how this plays out. As we here in this community, we already have kind of, lost faith in the dollar enough that we feel like we got to put a good significant amount of our money into gold and silver. And by the way, that's not to say that we should not have a store of cash on hand. I do believe it's still important, for sure. But I believe the ultimate protection of wealth is gold, especially gold. These uncertain times, as you can see, it is reacting, and it is reacting very quickly here. And so these little dips that we're seeing, you'll see that gold took the least hit today, for sure. In fact, we'll take a look and see what the last day has brought us with gold, and we can see that it kind of has a leveled, kind of gone down and kind of leveled out a bit here, but it has done very, very well. I believe over the past month or two, it's been pretty amazing. Ever since that big sell-off, gold has really rebound. There's where it is. So post your thoughts below. Very interesting indeed. And this index, I think, the sentiment, I think certainly is something to take into account, because I think psychology plays a huge role in the prices for gold and silver. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.